Don't blame me. I'm just an alien floating around in space.
That's okay, but there's actually been the government has actually found out that bugs have been dropped into the system, into our computer system, and it could be used to disrupt networks at a time of war or crisis. So they say the Chinese have attempted to map our infrastructure, such as the electrical grid, a senior intelligence officer had mentioned in the Wall Street Journal, and they said the Russians have too. And they said water, sewage, and other infrastructure systems were also at risk from the intrusions, which happened across the U.S. and grew sharply last year. So they see that cybersecurity is a major vulnerability with the U.S. Defense Department. They're spending over $100 million in the past 6 months repairing various types of damage caused by cyber attacks.
Okay.
So the U.S. government is convinced that China is endeavoring to overtake the U.S. on a dominant force in cyberspace.
Right.
So,
and I think there's some truth to that. I know that recently, I know our missiles. What was it? There was an article that said that about 50 of our missiles, we weren't able to make contact with them, or something like that. They went offline for a brief moment, and so we don't know what caused that, but it's possible.
I tell you, I didn't do it.
Okay, I believe you, Intergalactical Man.
I might have come down and taken a bunch of food though. I was
Okay.
kind of hungry. So sorry, my bad.
Okay. Is there anything else you wanna? What was your name?
Snowbide.
Okay. Is there anything else you'd like to share with us?
Well, I just want everybody to know that aliens do exist, as you can tell.
Okay. You actually sound like Gary on a voice changing machine, but that's another story.
No, it can't be.
Okay, because you disappeared on me all of a sudden.
Well, Gary had to come over here and do the feed. Couldn't be on camera.
Oh, okay. All right. Well, maybe we'll have you back as a guest in the future, and you can share some economic news from your planet, or maybe.
I would love to come back on the show. I'm a big fan, Crystal. Love you, babe.
Okay. Gary, are you going to come back?
yeah.
Okay. Well, in the meantime, I wanted to talk a little bit about the metals. Because a lot of people now are starting to, or there's a call now to start to invest more in gold and silver as a result of the quantitative easing. And you saw as soon as the quantitative easing program was announced, actually, gold and silver started to kind of skyrocket a little bit in value. And just wanted to go through it briefly. People know that you invest in gold and silver basically when there's fears of inflation, or there's fears of the currency going down. And just by way of example, I just did a little bit of research on it, but in 1971 President Nixon took us off the gold standard, and in 34 years before we were taken off,
He was not a crook.
Right, in 34 years before we were taken off the gold standard, the money supply increased by twofold. And since we were taking over the gold standard, our money supply has increased 13-fold. So if you notice that prices, and I always say this is kind of interesting, a lot of times when we see prices go up, we just automatically assume that the reason why the prices are going up is because of either inflation or because the asset is increasing in value. For example, when the housing market, their house was like, going up 10, 15, 20%. It wasn't so much because the housing values were actually going up that much. It was just that the money supply was increasing. So these money supply increases cause bubbles, and that's one of the concerns that China is concerned about, is that they don't want a bubble. They don't want our quantitative easing, which might cause an influx of money coming into China in the form of various type of investments, to cause a bubble in their economy. But anyway, gold has increased 18.43% so far this year, if you do a year-to-year dollar amount. And then silver, on the other hand, actually popped. And the reason why silver popped so high, it actually had like a 63% increase, and then it settled down a little bit. I think it hit almost $29 an ounce. It literally went from $17.98 an ounce back in August to $29.36 about a week or so ago, and then it kind of leveled out. And the reason why silver retreated in value a little bit was because kind of for a couple of reasons. Number one was that the COMEX increased the silver margin, and they had, if you were to trade in the silver market, trade futures, the margin was increased from $5,000 to $6,500. And that was,
Maybe you could kind of go that a little bit, kind of explain it a little bit simpler terms about the COMEX and how they do that.
Right. Well, it's the amount of money that basically the COMEX, that's the paper market. so that you're not actually buying silver coins. But if you're a small investor, let's say if I gave you 24 hours to come up with an additional $1,500 to trade in the market, that's going to force you either to come up with the $1,500, or if you're a speculator or a small-time investor, you'll probably cash out your position. Cashing out your position will cause the market to fall, because you're basically selling your assets. So if you have a large number of people selling, obviously the market is going to go down. Just like if you have a large amount of people buying, then the market will go up. Another thing that happened with silver was that the Treasury increased the premium on silver by $2, and that I think happened over the summer. And so even if you were to buy it, and a lot of people, when they look at the price of silver, if silver closed, I think I have the dollar amount that it closed today at about around $27.36 an ounce, you would not be able to buy that in the market. That's just the spot market. That's actually just the paper market. But in actuality, for the best dealers, if they were to buy silver directly from the U.S. Treasury, they would have to pay $2 premium. So you're talking about silver trading for an individual. You're talking about purchasing the actual metal. You're going to have to pay at least $29.36, and that's
probably more,
and more than that, right? That's what the dealer is paying when they buy it directly from the Treasury Department, and then they have to turn around and make a profit on it, so they're going to sell it to you at a premium. So you're looking at buying silver, maybe upwards to about $35 an ounce, depending on where you buy it from. Maybe between $30 and $35, depending, once again, from where you buy it from. But something that's interesting, if you hit Max Keiser's website, and that's MAXKEISER.com, he has an interesting theory. And he's wants everyone in America to buy 1 ounce of silver. And the reason why he wants us to buy an ounce of silver is he's trying to put the squeeze out on J.P. Morgan, because J.P. Morgan, in essence, is keeping the price of silver artificially low. And what they do is they short the market. They make these huge positions in silver. They take these huge positions in silver, and then they sell them. But they're not selling the actual coins. They're actually just selling, the paper amount. And so historically, silver trades somewhere between 15 to 1 to 20 to 1 to the price of gold. So if silver was trading, let's say 15 to 1 to the price of gold, and gold right now is trading at about $1,300 an ounce, what silver should be trading at is about $86 an ounce, not $27 an ounce. So what Max Keiser is saying is that, if everybody in America will buy just 1 coin of silver, which is only about $30 that you're investing, or $35 depending on what the premium is, then that will force J.P. Morgan to have to come up with to cover their bet, and they wouldn't be able to do it, and that might break this hold on the silver market that's kind of like an artificial keeping the market down based on trading.
You think that's a good thing?
I think that any time that the markets are not free and that they're being held down low artificially, I don't see how that can help anyone. So I would say, I think that everyone should have an equal opportunity to make a buck. I don't think that the market should be rigged in a way that only one party benefits and then everybody else doesn't benefit. But I think if you want to get more information on it and get a better understanding, I would hit his website. It's actually a good website to look at anyway, because he has a lot of good information on it. So check out Max Keiser's MAXKEISER.com, and there's a lot of information on buying silver.
Okay. There was an article I have here too. This is another kind of related to China, even though Zoltoid had to leave, but he wanted me to go over this with everybody. China had hijacked, they say that China hijacked 15% of the world's internet traffic at a certain time period and targeted U.S. government and military websites. This article was by the Daily Mail Reporter on the 18th of November. So they said that they basically, what they did is they had somehow routed all the internet traffic to go through their servers for a short time period. About 15% of the internet's destinations located went through these servers in China, and a lot of them were government websites.
Okay.
So they think that they kind of hacked it, and again, just going back to all this cyber things, it's kind of like the monetary wars, the cyber wars. There's a lot of stuff kind of going on under the radar.
Right, and what it seems like what has happened is that there's been a transfer of power, basically, or a shift of power. I think America and our dominance in the world has been challenged by China, and that China has been kind of quiet. But now they're starting to, assert their influence. And we might have thought that our military was the number one in the world, but it looks like quietly China has been building up their armed forces. And as far as their ability to, like their cyber attacks that they're having, obviously they've gotten some pretty sophisticated. They've gotten pretty sophisticated with regards to that market as well, and economically they're pretty sophisticated too, as far as their growing dominance in the world economy. We're now